Before we place any trade, before we even think about the entry, we run this calculation every single time, no exceptions. If you're not doing this, you're actually not managing your risk. You're actually guessing. And today, Bogdan and I are going to show you the exact position sizing formula we use on every single trade and why it protects your account when everything else goes wrong.
And I will say this, before I started running this calculation, I thought I was managing risk. I wasn't, buddy. I was guessing with a bit of structure around it. This formula is the difference. Once you see the maths, you will never size a trade without it again.
Absolutely, mate. And a quick note, if you want the full toolkit, our calculation templates, the portfolio heat tracker, and the complete drawdown protocol, that's all inside Dimension 6 of the Trade Management Mastery Pathway Hub. We have a link in the description to join our community. This video is just the framework, and the pathway is actually our operating system. So let's get into it. Bogdan, let's go.
Let's go, buddy.
Here's the uncomfortable truth that most traders don't want to hear. You can have the best strategy in the world and blow your account with bad position sizing, and you can have an average strategy and build wealth with correct position sizing. That's how important this actually is. Most accounts aren't blown by bad signals. They're blown by too much size at the wrong time. It might be like one revenge trade. There's always that one, I'm confident in this is going to run trade. There's the one oversized FOMO entry. And what you can do is months of gains can be wiped out in one single session. So position sizing is actually the most underrated skill in trading, full stop.
Exactly, buddy. And I can tell you exactly when this landed for me. Early on, I had a trade where I was completely right on the direction. The asset did exactly what I thought it was going to do, but I sized in a way heavy because I was overconfident. When I put it back against me before continuing, I panicked and closed the position at a loss, a big one, buddy, and then watch it run it without to my original target without me, and I was right. I stopped. I still lost money. I lost it purely because the size was too big for me to hold through the normal movement. I had been at 1% risk, and I will have stayed in comfortably. Instead, I let my confidence drive my size, and my size drove my emotion. And my emotion made the decision for me. The setup doesn't matter, buddy, if the size destroy you. I learned that on the hard way.
Exactly, mate. We've all felt that before, right? We need to be in the right position sizing so we can let our strategy play out. That's very important. So position sizing is not about how much money you want to make. It's about how much you can afford to lose on a single trade while keeping your account intact and your strategy executable, just like Bogdan shared just then. Before we get into the formula, we need to clear something up because this trips up almost everyone the first time they hear it. The 1% rule does not mean you put 1% of your account into the trade. That's not the rule at all. The 1% rule means the maximum that you can lose on any single trade if your stop is hit is 1% of your total account. That's your risk. Not your position size, but your risk. So let's go through a few examples. On a $10,000 account, the maximum dollar loss per trade would be $100. That's it. It's not a $100 position, it's a $100 loss. And this distinction is everything.
And the obvious question is, why 1% and not 2% or 5%? Walk through the maths here, guys. At 1% risk, you can lose 10 trades in a row and still have 90% of your account. At 5% risk, 10 consecutive losses wipes you. A losing streak is inevitable in any strategy. 1% is the number that make you survivable.
100%, mate. So let's make this concrete, right? So if you're trading with a $10,000 account, your maximum risk per trade is going to be $100. If you're trading with an even larger account at $25,000, let's make your maximum risk $250. And on the flip side of that, if you're trading with a $1,000 account, your maximum risk is going to be $10. So what you need to do is you write that number down now, and that number doesn't change until your account size changes. So now you know your risk number. The next question is how do you turn that into an actual position size? That's the formula, and that is where Bogdan is going to go through the live calculation. Now, the formula is actually 2 steps. It's the account size times 1%, which gives you your max risk in dollars. Then you divide that by your stop distance in dollars, and that gives you your position size. And that's it. It's 2 steps, simple in theory. And we're going to show you why you never actually need to do this manually, because we've already built the tool for you that does it, and it does it easy.
Exactly. And the thing to understand about this formula is that your stop placement is what drives your position size. So if your stop is tight, the formula gives you a larger position. If your stop is wide, the formula gives you a smaller position. Either way, your risk is locked at 1%. The formula keeps the constant regardless. That's the whole point of it.
Exactly, mate. So now I said you don't need to run this manually, and here's why. So we've built the Trade Management Mastery position size calculator specifically, so this is handled for you. You put in your account size, your entry price, and where your stop is going. The calculator then spits out your exact position size. It also shows you the required margin, so you can immediately check that your account has the capacity for this trade. And that whole process takes about 20 seconds. There's no mental maths, there's no guessing. The number is right there on the screen before you touch the buy button. And that calculator is available to everyone inside our Trade Management Mastery community. And Bogdan, I'm going to show you, this is it here, buddy. This is what it looks like. So this is the calculator that has been created. Everyone in the community uses it, and you can see clearly there, you insert your trading balance, the stop loss distance, your risk level of your account. It's automatically defaulted to 1%. You enter in your leverage, and it just spits out the number. So 1% of $1,000 account is $10 maximum risk, that big orange number. Then it tells us our total position size, and then it tells us our margin. It's that simple. You don't need to do any maths in your head. If you're not a maths person, we've taken care of that problem for you.
But it's amazing tool, buddy. Amazing tool. And what I really like about it, how TMM has set this up, is that the position size calculator is actually built directly in the TMM journal. So when you go to log a new trade, the calculator is right there on the same screen. You are not jumping between tools or copy pasting numbers. The way it's working is you open the journal to log the trade, and before you can properly fill in the entry, you're running the calculator. So it forces the calculation to happen as part of the journaling process. You literally cannot skip it, and that's what builds the habit. It's not something extra you have to remember to do it. It's just a part of how you log a trade.
And that's the point, mate. Discipline isn't just about knowing the rules. It's about building the systems that make following the rules the path of least resistance. We spoke about this recently on a Zoom with our community. In trading, it is essential that you do the thing that causes you the least amount of stress and anxiety. And so we have built the calculator into the journal so that it does exactly that. The habit gets baked into the process rather than relying on you to remember to do it under pressure. So both tools are actually in the community, built into the Mastery Hub. The standalone calculator is in there, and also the journal is in there as well. So you can just get your position size calculated as you fill out the journal. It's all built in there. So that handles individual trade sizing, but there's a second layer of risk management that sits above individual trades, and most traders completely ignore it, and that is portfolio heat. So now you know how to size your individual trades correctly, but there's a second layer to risk management that most traders completely ignore. And like I said, it's portfolio heat. Now, portfolio heat is the total risk across all of your open positions at any one time. So for example, if you have 3 open positions, each one at 1% risk, your total portfolio heat is going to be 3%. And 3% is actually our hard limit. We do not go past this. So when you hit 3% heat on your portfolio, there's no new trades. Full stop. It's end of story. It's game over. It doesn't matter how good the next setup looks.
Exactly, buddy. And here's the thing, man. You have to be careful with correlate position, because free Bitcoin trades at 1% each looks like 3% hit on paper. But if Bitcoin, for example, dump hard, all three stop out at the same time, your actual exposure is much higher than 3%. If you're running position that move together, treat them as combined hit, not individual. That's a rule a lot of people learn the painful way.
No, that's it. And we've seen it as well when you're trading tokens of the same ecosystem. So you might be trading Solana and then their DEXs, right? They all move together at the same time. So you can't treat each one of those as a 1% individual, because we know that they are going to move together. So they need to be dealt with differently as a combined risk, okay? So the rule is this: check your total heat before every entry. If adding this particular trade takes you 3% or above, then you just don't take it. And there's not a case of like, oh, I'll just take this one because it looks awesome, right? We've all done that before, and we've all been burned. That's why we call it a portfolio heat, right? You just don't take it. The best looking setups, after you're already at full heat, are usually just FOMO trades, right? So the rule removes that temptation entirely, right? It's just game over, no more trades.
Exactly.
And that brings us on to the next topic, mate, which is an interesting one as well, and one that is going to save you a bucket load of cash. And the last piece of this risk system is actually the 2-loss circuit breaker. And I want to be clear about what this is. Now, this is not actually a punishment. It's a protection mechanism. 2 consecutive losing trades in a session. You stop trading for the rest of the day. Done. Close the platform. Walk away.
Drink a coffee.
Yeah, exactly.
The reason, Matt, this work is neuroscience. Yeah, after 2 losses in a row, your cortisol level is going down, buddy. It's elevated. The rational part of your brain is generally suppressed. You are not the same decision maker you are before these losses, and is that state you are statistically far more likely to revenge trade, oversize, or take a setup you are never normally touch. The circuit breaker removes the decision from an emotional state. You don't choose to stop. The rules stop you. That's the entire point, buddy.
Mate, think about how many times you've turned, right, a 2% losing day into 6%, 8%, or even more, chasing some losses.
Oh my
God. Most traders have been there, and the circuit breaker is designed to cap your damage at 2% on any given day, right? You imagine, mate, over a full year of trading, what that rule alone is worth in terms of dollars protecting your capital.
Oh yeah.
Right? 2 losses, you close the platform, you come back tomorrow, that's it. Sleep it off, come back tomorrow, away we go again.
Exactly, buddy.
So how do you make sure that you run all of this that we've talked about every single time? What you do is you build it into your pre-trade checklist. So before you click the buy button on any trade, you run through 6 steps, right? You want to know, what is my account size? You want to calculate your maximum risk, which is your account times by 1%. Where does my stop go? So this is a mechanical level on the chart. This is not an arbitrary level. Step number 4, you calculate your stop distance in terms of dollars. Step number 5, you calculate your position size, which is your maximum risk divided by your stop distance. And step number 6, you check your portfolio heat. Does this trade take me over 3%? And only then do you actually execute the trade. You calculate your position first, assess the setup second, never the other way around. If you reverse that order, it's actually your emotions making the decision. So if you run the formula first, the maths makes the decision for you.
Exactly, buddy. And the thing is this. When you first start running the formula, it feels like extra work. I know I was there. Another step before the trade. And then about 2 or 3 weeks in, you realize you are not anxious about your trades anymore, because you already know the worst case before you enter in a trade. You know exactly what your risk, the certainty changes how you hold the trade. You stop reacting emotionally because the maths already made the decision for you, basically. That's what this formula actually gives you. It's not just the right position size. It's the ability to stay in a trade with a clear head, guys. With a clear head.
That's the most important thing, is about being completely chill when you're in the trade. You can look back at it and go, you know what, I've only got 1% of my account at risk. 1%. That is nothing. Yeah. I can live to fight another day. All right, so let's go through a recap, buddy. We've got the 1% rule, which is a maximum of 1% of your account at risk per trade. We went through the formula, right, which is your account times 1% for your risk dollar divided by your stop loss distance for your size. We've also got our position size calculator that does it for you, right? We've got portfolio heat, never exceed 3% of total exposure across all open positions. We've got the circuit breaker, which is 2 consecutive losses, and then you stop trading for the day. So if you got nothing else from this video, run this calculation before every single trade and your account will thank you for it. And as we mentioned, if you want the full toolkit, the calculation templates, our position size calculator, our journals, the heat tracker, and our complete drawdown protocol, that's inside Dimension 6 of our Mastery Pathway Hub. All of our members of our community have access to. The link is in the description. But until then, stay sharp, stay disciplined, stay safe, and thank you, Chef.
Thank you, buddy. See you next time.